Hello and welcome to the Rask Network. What you're about to hear and see is limited to general financial information only. Please be sure to speak to your financial planner or refer to our financial services guide available at rask.com.au/FSG before acting on the information. Phil Thompson from Skye Wealth, welcome to episode 7 of this insurance miniseries.
Thanks for having me.
Just to recap the episodes we've covered so far, an introduction to personal insurance, lump sum insurance, income protection insurance, the different ways that you can buy your personal insurance, so super, outside super, going direct, to an advisor, etc. We went through the application process, what it means to actually get a good insurance policy, how it goes, like where your medical information goes, how it's underwritten. Number 6 was all about adjusting cover or just reviewing it at the outset. Number 7, this is our final episode. It's kind of taken us through the life cycle, if you will, mate, is all about making a claim on your insurance, no matter what kind of insurance it is. So if you're at this stage, you're going to get a lot of helpful information from Phil, as well as I'm sure we'll make reference to literature, and you can visit the Skye Wealth website for more information as well. Now, if people have made it this far through the series, they've done bloody well, if I do say so myself. But what's the number one thing you'd want everyone to take away or just even action right now?
In terms of claiming or just
in general?
Yeah, insurance is so important. It's not talked about. It's not very sexy, but life insurance is such a core part of someone's wealth creation strategy. And so I just want people to really think about it as that, we don't just go into the highest growth, opportunities and 100% into crypto because there's the biggest upside. We think critically about our investments and about going, how do we mitigate risk within our investments? Do we diversify our investments? And this is about diversifying our cash flow to allocate some money towards that downside protection. And so that's kind of my number one is think about insurance as the protection on our wealth, strategies.
Mm-hmm. That makes sense. So it's think about the risk and how you can protect yourself if things do go wrong. So important. I was actually thinking about a recent conversation I had with an older woman who has been through some medical issues, so we say even things like work cover and these types of things, which we talked about in previous episodes. And over the past couple of years, she kind of went through the ringer, to be honest. She was like meeting with specialists, meeting with lawyers, meeting with like all different types of mediators and that sort of stuff. And by the end of it, she's like, I spoke to her insurance person and they said I could make a claim, but I was just so beaten. I've been so beaten up and so overwhelmed. And they knew that they were entitled. In this case, it was about $40,000. They knew that they were entitled, but they were just so overwhelmed by the process and the thought of going back through and dealing with getting a specialist report, lodging the form with their insurance. And it was just so much. But I would say if I was going to give people something to remember is that you are entitled. There's nothing wrong with making a claim. As Phil said in the previous episode, like chances are, I don't know the exact number, but more than 90% of these claims get paid out because that's why you have the insurance. So if you are entitled, make the claim. There's nothing wrong with it. You've got this, you can do it.
And one thing I'd actually, talk to that lady about is actually, you know what? If you're not up to it just yet, you can wait. You don't need to go, if you don't need the finances today, you can actually take 6 months of just resting, getting on top of it, because you can actually go back and claim later. So there is no kind of time frame of which you need to make that claim. So if you need a break and you don't need the money in your bank account today, just take a break, go easy on yourself, spend 6 months, and then you can build up the energy to go, actually, it is $40,000. And yes, I've got to do forms, but if I was insured at the time of the injury or illness or sickness, you're still eligible even if you claim, in 5 years' time.
That's great. And that's actually what she did. So that's good to know. Okay. So let's talk about just a general, how do you make a claim? What's the process? What are the steps? We've talked about in previous episodes about the claim statistics. So we probably don't need to go through all of that again, but just generally, how do I make that claim?
Yeah. So, one thing that we see a lot is people don't actually realize that they can make a claim on certain things. And so a big part of reviewing your insurance is often coming up to, medical issues and going, well, actually, this is maybe a claimable event. So if you set it up through an advisor, which as we know, I'm a big fan of, just reach out to your advisor, send an email. We get emails all the time from our clients saying, hey, this has happened. Just want to check in. Is this a claimable event? And they may not have any time off work, but it still may be a claimable event. Now, that's the best case scenario where you may get money and you don't even realize that you've needed it. So it's definitely worthwhile reaching out to your advisor and just having a chat and just say, this is kind of what's happened. Does the PDS reflect a claimable event? Now, the more serious claimable events is the process in doing it is you've got to contact the insurance company. Now, we always recommend come through the advisor because we can help kind of facilitate that whole process with you. But we connect with the insurance company. We let them know about the insurance policy, and they provide us the claim form documents based on the potential claim. So there are a whole number of policies and a whole number of extra benefits within policies. And sometimes just doing that initial assessment with the insurance company, you don't need, your TPD forms if you've been off work for, 6 months because you're not totally and permanently disabled. So there's no point in the insurance company giving you that. So if you've got insurers through your super fund, connect with your super fund and they'll pass you on to the insurer's claims assessments.
Okay. And so so just to summarize that then, if you've set up with a policy, say with an advisor, like say if I go through Skye, which I am right now, and my advisor sets up the policy, happy days, start paying it. And then a year from now, I think, I've just had this medical issue, I've been off work or whatever. I would just flick whoever is assigned to my advisor in your team. I'll just flick them an email, say, hey, this is what's up. This is what's happened. Next steps. That's probably the easiest way to deal with if you've got an advised policy.
Yeah. Yeah, exactly.
Yeah. And if you went direct, like through either through your own super fund or through direct to an insurer, they'll have links and things available on their website to make a claim, and they'll just basically send that all, and you just got to self-manage it.
Yeah, exactly. And look, the other thing is when you go through an advisor, you're not locked to the advisor. If you don't want to talk to that advisor again, you can go to the insurance company. You're a policyholder of that insurance provider. The advisor is there to assist and help you, but if you don't want their assistance, you don't actually need to. Yeah.
Typically in this process, let's say it's like income protection just as an example case, and it's a big one. Like I've been off work. I'm a tradie. I've been off work for 7 months that's what is likely to happen. So say I'm like 2 months into that process. I've just been through surgery. I'm still not going to be able to walk for a while. So I'm not going to be able to work. Typically in a situation like that, I'm assuming, Phil, I would need to maybe get like all the medical docs from like the specialists and the GPs.
Yeah.
That sort of stuff. I could have to keep a copy and a record of all that. Is that correct?
Yeah. Yeah, that's right. Yeah. So the claims process is those initial claims form, they'll require the medical form. So depending on what the claim is and depending on a whole bunch of things. So things like trauma insurance is relatively clear cut, and we just get for cancer, we just get a report just indicating what cancer or what stage, and then it's relatively straightforward. And then the medical practitioner does need to fill out the forms and talk about when they first saw the patient, and there is that information. But that's where the advisor and the insurer, we're all aligned in terms of going, if it's a legitimate claim, we don't want to drag out the process because the insurer is still going to pay. They want to make it as smooth as possible, to get claim paid. And we've had some really kind of interesting claims experiences. One was one of our clients actually went to Taiwan to get treatment. So we went to the insurance company and said, hey, all this medical report is in Mandarin. How do we do this? And so the insurer came back and assisted us. And imagine if the client went directly to the insurer and without us, it would be much more difficult process. It wasn't an easy process with us, but it was an easier process because the head of claims was able to come and talk to us and explain, okay, what's going on because of our size and our scale and the relationship we have with the insurer, we're able to kind of make it smoother. And then the other piece of advice I would give to people is contact your advisor as early as possible. Even if you don't think it's a big thing, just let them know. We had a client who had what she thought was just like the flu and a cold, and then it progressed into chronic fatigue symptoms. And so she had been off work for a long time and contacted us later. And we did have some issues at the claim time with regards to when did her date of disability begin. And that was because she actually tried to push herself to go back to work during that waiting period. And that just created some complications with the claims experience. But if we had a chat, we were able to talk about, okay, it's not about gaming the system, but understanding the policy, because there are a lot of T's and C's with these policies, and you've got to meet specific requirements during that waiting period. But that's my advice. Connect with the advisor really early, even if it's not a claim or it's not yet a claim.
Yeah, because the date of injury can be really important, right? Like assessing that time. The other one that I wanted just to throw at you as a bit of a claims hypothetical, if I may, is the mental health one, which you've talked about. And then when you go through the Skye Wealth information gathering process, you actually prepare a video. You've actually done a video on that, and it's called kind of like animated plus you talking video. Mental health was a big one, and back injuries or pain or symptoms were a big one. But in terms of mental health, I'd imagine that one in particular does require a little bit of like information from medical professionals, these types of things, because it's not one of those things where you can be like, well, Phil's got a broken back. It's pretty clear that he hurt himself. Whereas this one may be a little bit more detailed and require an advisor to help manage that process.
That's right. And at the end of the day, like the insurance company's got their requirements, what they need to see time off work, but they also rely on the medical practitioners to give their professional advice. And so that's why for mental claims, it is the hardest thing to assess, because, as you said, I can do a scan and see if your arm's broken or your back's broken, but I can't scan your brain and see if you've got a mental health condition that's meaning you can't work. So it is much more nuanced at claim time. And that's why for anyone who's gone through significant mental health experiences, their experience with the doctor is not easy or simple. Like doctors aren't, take 12 months off work. So it is difficult, and I empathise our clients who go through those claims. But generally speaking, like at the end of the day, the insurance company has their product disclosure statement. It has very clear requirements, what is and what isn't a claim and how it all works. And they rely on medical practitioners to give their professional advice on terms of how much time off.
Okay. And another one that I wanted to kind of bring up is like a real life story. I'm fortunate, I've never been through this process, but in the case of life insurance, otherwise known as death cover, which we talked about in episode 3, the key thing, or it might be in episode 2, sorry. The key thing there is that if I have the policy, I'm not making the claim, right? But I've passed away. Someone else is left to make that claim, whether it's, is it my executor or my trustee or whoever of my estate, or whoever holds the policy. How is that different? Like, what happens in that situation? Like, can you tell us, like, if someone's watching this or listening to this, Phil, I'm thinking like they have no idea about finance. They've just come along and they've figured out, hey, my XYZ has passed away. What do I do?
Yeah. So for life insurance claims, we need to have a death certificate. So that's where sometimes it can be, depending on, the cause of death and all of that stuff. So that is something that we do need to claim on. In terms of like who can submit that claim, is really, if you've got a copy of that death certificate, we can submit that claim. Now, where the money goes is dependent on the nomination. So if the policy is paid outside of super, then the money will form part, unless there's a nomination on the account, the money will form part of the estate and we'll go through that probate process and will form part of the will and where it gets allocated. If it's paid within super, it'll be paid within a super environment. And again, it can be nominated out. So for my policy, I'll talk about my policy. If I was to pass away, because I'm a finance geek, I've got an email that, I've sent to my dad and my sister what to do if I die with my policy numbers in there. And so my wife would go and make that claim, and I've got a nomination to pay out that life insurance benefit directly to Kate, because one of the great things about life insurance, it doesn't need to form part of the will. It can actually skip probate. And so if you have a binding nomination on your life insurance policy, it can go directly paid to Kate within a week, as or less than that within a death certificate. So it is a little bit, obviously you're not claiming on your own life insurance policy, but as long as we've got a death certificate and we can prove that that person's passed away, then the insurance provider will make that claim, will pay out that claim based on that nomination, or pay out based on the will, which then if there isn't a nomination, the executor will reach and will be in contact with the insurance provider about it.
So if you're the executor of one of these things, that's your role. Okay, just real quick for anyone else that hasn't been through it, where do you get one of these certificates, like the death certificate, from?
Great question. I should know.
Okay, we'll put a link in the show notes to that.
Yeah, I've never done it with anyone I know. But I guess the hospitals do it. But sometimes if there is a suspicious death, not like murders or anything crazy, but if it's a little bit like, hey, that's a bit more suspicious, a coroner will need to, do a death certificate, and they might need to investigate the cause of death. So I do know my sister's sister-in-law passed away, and they needed to go through that process, and that can just take a bit more time to get that death certificate issued.
Mm-hmm. Okay, so that was that's something, and we can put some literature in the show notes as well, as we always do. The other thing is, so in that situation, is you can see from what Phil was saying, or here I should say, is that there's a mix here between how you set up the insurance policy for life and where it goes, how it's held, whether it's super, whether it's direct, whether it's whatever the case may be. You can see that that's really important to think about as well. And I think that's one of the kind of the hidden benefits that come with seeing an advisor. We talk a lot about that throughout this series, about the importance of seeing an advisor. But the advisor's got that in the back of their brain as well. They're thinking, based on this policy, it would get paid here, and this would be the process. I've heard of situations, Phil, where there may have been like policies held in super, and because the superannuation rules are different to the insurance rules, which are different to whatever other rule there's going on in someone's life, there can be things held up or stalled, or money going to super that's not released, like different types of things, right?
Yeah. Yeah. I mean, a good example is if there's, like if your superannuation fund has a binding death benefit nomination, and maybe with an ex-partner, and your life insurance is held through that super fund, then the money will get paid directly to that super fund, and then can get paid out. If it's binding nomination, will get paid out, and there's no real questions or contest through the estate kind of process. And that's why it's important to make sure you're updating your nominations, making sure you're setting it up well. Like, do you want the money directly paid to your estate all the time? That'll mean that it takes longer to get the money in your bank account, or do you want it just paid out directly? So for me in my situation, I've just got a binding death benefit nomination directly to my wife. If I pass away, the money gets paid out literally within a week. She'll get the money of me passing away. So yeah, that's really an estate planning thing, and definitely talk to your lawyer when you're setting up wills, because that will help guide you in terms of, hey, you should have a death benefit nomination, or you should nominate the will, and they'll give you advice around that.
That's really important. I think of insurance in this instance as definitely one of the major components that go into estate planning. And so this is where you have that team of experts around you. Like, people have an expert, lawyer, an expert in insurance, an expert in property, an expert in investing. Like, you have a team of experts around you, which is what you kind of really want as a result of doing all this work. Okay, so I should mention here, and just as we come to the end of the series, is that there have been some major things that Phil's covered in terms of just knowing what your cover is the basic thing. Now that's like, let's just get you in the door with the conversation. Just go and check what your cover you've got. How much do you need? Is it reasonable? Just assess yourself. That was in episode 2, but in episode 6, you did mention that the real big life events, things like mortgages, kids, retirement, different types of things that could have an impact, changes in your occupation, around whether you need to update or review. in episode 3, you talked about a few different tools. You had mentioned this thing called paycalculator.com.au. The reason you brought that up is because you mentioned the 3 keys, which are the waiting period that applies to your insurance, the benefit period, like if you have income protection till 65, or whether you've got it for 2 years or 5 years or whatever the case may be, the amount that you get paid, and after tax for income protection is a really important thing to understand. So you mentioned a free resource, paycalculator.com.au. You said, question everything because you're a naturally skeptical person when it comes to these types of things, which is a good stance to take, including the original questionnaire you might have filled out if you got insurance through your superannuation fund like I did. You can actually request that from the super fund, you told us, which is great. In episode 5, you told us that disclosure is most important, and that's where you referred to those questions. Go back and get them and assess those questions that you answered at that point in your life and think to yourself, if the insurer was reading these and saw my medical history, would they agree that I disclosed everything appropriately? That's just like a really important thing, because you're paying for the insurance. Would they actually agree with you that you took reasonable care, or that you were honest and truthful and all of those things? And finally, for today, this is episode number 7 on claims, and just being aware of what insurance you have, doing that review, going to see an advisor if that's the most appropriate thing, and I think it is for most people. Obviously, Rask has a partnership with Skye Wealth and your team, Phil. I'm going through the process. I think it's really important. I used to think that it was a great idea to have all of my insurance through super, and I still think that there's pros and cons to all of that, but I want to get more focused and dialed in as my financial responsibilities tick up. And I think most people that listen to this show would too. So there's a lot to go and explore with the Skye Wealth team. There's a link in the show notes to book in. We've been through the process. Book in a call, have a chat with them, understand the process. Then they'll ask for an upfront fee to cover their advice that they go and put together for you. You'll fill in the forms, you'll go through the process, and they'll take care of things from there. So, Phil, it's been a heck of a ride. I've never done 7 episodes on insurance ever in my life. But I've really thoroughly enjoyed it. This is one of the things where you need to go an inch wide and a mile deep. And once you set it up, as you said, it's not like car insurance. It's not like your home and contents. Once you set it up and once you get the right advice, that's the key thing to then maintain it, be in contact with your advisor, so on and so forth. Really important.
And yeah, I mean, bringing it back to claims, like if anyone's gone and had a car crash, our car's in the repairs because I hit a kangaroo the other day. So you've gone through, claims experience with a car. We had an issue with our house. We had to claim on our home and contents insurance. Like all of those things are really stressful. But when you overlay the personal insurance claims, it's all about health. Like you're having an issue with your health, you're unable to work. So you've got these health issues, overlaying a financial stress with it. That's kind of the most important thing to get right properly. And again, I did talk about earlier on, we try not to never to scare people. I'm a very pragmatic person. I just think very pragmatically about, protecting our wealth. But at the time of claim, no one who's gone through a claim has gone, oh, this has been really simple and easy in terms of, it's low stress environment. It's the highest stress environment that most of our clients who go through claims have ever been through in their life. And we get that feedback all the time about how incredibly stressful it is making a claim on your personal insurance cover. And it can be like long-term claims. We've got clients who have like long COVID who are still on claims more than 2 years later and getting partial payments, and they're able to work part-time but still getting some income protection claims. Chronic fatigue, we've had cancer, we've had lots of claims through our business and helping our clients with their claims. And it is the most difficult claims experience that you will experience because of those financial stresses on your life and the health issues. This client who's got chronic fatigue literally has no energy to manage any of this stuff and has no income. And so it's like incredibly stressful. And that's why having an advisor is so important who can advocate for you. If there are any issues, they can explain it with you and it's less adversarial. We are here together trying to get this claim paid. And if it's not going to get paid, I'm here to explain in layman's terms why it won't get paid or why there may be some issues or why it's slowing down. So, I really want to, put emphasis that claiming on your personal insurance is so much more stressful than a car insurance claim or a home insurance claim.
Yep. Well, that's the takeaway. It's just try to be aware of what your life would look like if you were in that situation, not to scare you, but just the realities. I mentioned before at the top of this episode that someone who just went through a work cover thing, she was she's fine. Like she's working, she's doing that now. But just it's kind of like the things that it brings up for her and the issues that she's had with being not interrogated, but, through the work cover process, how hard that was for her, dealing with, some nasty events that happened previously and stuff, how that's left a mark on her and how she's in the situation now, or she's now going back through the claim process, which is great for her. But that's kind of like I would characterize that, if I may, at the kind of the lesser end of the stress spectrum, but it's still so stressful for her and she'd never been through something like that before. So two things that arise for me there is one, just, preparation is probably the most important thing. And number two is this is one area of your life where getting expert support would probably pay for itself many times over. Like I could do a DIY will kit, Phil, but I don't. I pay a lawyer and it's painful when I pay them. But I know that would be so much better for my family if I was to pass away in my estate planning. Why would I not pay a little bit more now? And as you've told us, with getting insurance advice, it can actually be cheaper. So, and you get better cover. So, I mean, there's
I'm doing your comparison because it'll be good to show you how you've actually been paying a lot more potentially.
Okay, well, I'm happy to share the details of that at a high level with what I've been paying versus what we're getting. So, mate, this has been really, really eye-opening, and I know the audience will love this and the community at large. So I really do appreciate this, and I really do appreciate you partnering with Rask and the Skye Wealth team, bringing that expertise into our community. So thanks once again for the series, mate, and have a great day.
No, thank you.
Thanks for watching this video on the Rask Network. While you're here, don't forget to like and subscribe so you can get videos each and every day on business, finance, investing, and so much more.